So I think as we kind of compare your guys' experiences in Vegas and in Beijing, we're seeing a lot of similarities, a lot of speaking about how do the networks adapt, how do we innovate on top of this kind of fundamental building block, but also what are those kind of few use cases that are really going to drive return on investment and kind of really go into production in 2025. So I think looking at the research that NTT Data conducted, there were some regional differences that were quite interesting. So for example, European respondents were much more focused on productivity increases using AI, whereas when we're looking more at the US and Asia Pacific regions, there was a bit more around the competitive advantage and going, oh well, our competitors are doing this use case, maybe we can gain an edge by focusing in a different area. Does this kind of chime with your guys' experiences? Were you hearing a lot about the competitive angle at your events? Maybe Niraj, we could speak on yours first.
Yeah, so Dan, I think the survey results are very interesting, where we looked at all the three regions, and obviously there were nuances between those regions. So, for example, when I really analyzed the results, it was not surprising to see the US and APAC focus more on the competitive advantage side of it, right? Because obviously, and we've seen this in the evolution of transformation as well. The European market's been more prescriptive in terms of how you should transform. So right from the old days of GDPR, which was formulated for the European Union first, and then versions of that went to the US and the APAC market. And data obviously is the cornerstone for AI. If you look at payments, and the adoption of real-time payments started in the European market the first time. So I think the European market's been fairly advanced, is fairly prescriptive. They've sorted, everyone's on a level playing field. Now let's talk about efficiency. Whereas if you look at the US, early stages of adoption, can I really use Gen AI to leapfrog competition? And similarly for APAC. So if I double click on the results, not very surprising to see the regions being different. But I think it is an evolution. And very quickly, as more and more institutions in the US would adopt Gen AI, you would start seeing this more as an enabling technology for efficiency rather than gaining competitive advantage because you've adopted it much faster than what the others have done. So it's just a matter of time, in my view.
Of course. Does that I think chime with what you've been hearing in Las Vegas, Madhu?
Yes, absolutely. Very similar. Where it extends a little bit further, what Niraj said is mostly, while everybody is working in transforming customer experience, optimize operations or stabilizing operations, and also unlocking new revenue streams. Say, for example, wealth management, right? To give portfolio optimization, simulate portfolio outcomes, and then financial planning assistance, right? This aligns very well. And roughly in 2024, based on North America market, there is almost a $2 billion investment in use cases, and they're expecting 15 to 20% returns in 2025. So that is tracked. And when you look at risk management and fraud detection, advanced models, AI models to analyze transaction patterns, detect anomalies, right, in real time, using autonomous agents. This is where the regulator and financial institutions are working together hand in hand with that API ecosystem that is coming, where lot higher, almost 5, I think, in 1.5 billion in 2024 has been invested. And basically, the outcome, market outcome is it has helped to arrest 12 billion worth of fraud, right? Just to give you, but that means there is a higher avoidance, almost 50% faster and higher resolutions that is happening in the industry. That's what I see, Dan.
No, that's very interesting. And again, I like that we're returning to that API ecosystem, because I think you brought up a very important term, which is, agentic AI, and we're seeing that. We've seen media publications kind of calling this the year of agentic AI, and depending on how much industry picks up that term, I think will be an interesting theme throughout 2025. So, we've spoken a little bit about maybe the variations between what you guys saw at these kind of big financial services conferences. And I think maybe one thing that's important to note is that these are conferences, where you're meeting people who are at the cutting edge of all these advances, and they're there to kind of share information and share findings and kind of discuss what's next, kind of what's on the horizon. So I think it'd be interesting to come back and speak about, not just what are the most innovative and biggest companies doing, but also, when you're speaking on a day-to-day basis to your clients, large, small, big corporations, slightly smaller ones, do these conversations sort of have themes that are repeated there? Are companies also interested in things like agentic AI and API ecosystems and things like that? Maybe Madhu,
Absolutely. I will cite two examples, right? Two interactions which are very real, two or three rather. So, which we discussed about bringing trade finance, about invoice factoring or purchase order factoring, and invoice purchase order discounting and invoice factoring to bring GenAI. Then there is also invested heavily. They formed a lab in San Francisco where they have now created the plumbing, right, to how to bring partners, right, how to bring, and the areas they are focusing, surprisingly, is very similar to Morgan Stanley, which is the trade surveillance, because that's where they feel that they get the budget from the business, because something, even a 99% false positives, right, which is happening in the surveillance, if you reduce it by 1%, means it is almost $40-50 million savings, right, in terms of efficiency, in terms of future proofing, and also improving their client experience, all put together. This is the number quoted, right? So that is one. Whereas when we discussed, when came in, they're saying that how can we improve the product experience? How can we bring product experience? So that means how can we render offers that is more aligned to their customer preferences, either corporate or retail, versus don't offer something that they're not in their interest. So where they want to arrest the churn, right? Then, so that is another clear example of more of marketing strategies, right? Then there was which we came, and they said they are interested in adoption to cater to multi jurisdictions, like they operate across the globe. How can they build a Gen AI or AI layer that helps to achieve localizations, right? So that means it's more of an enabling play there. So I think these were the use cases where they are very keen, and they are really put a lot of money in their roadmap to develop and achieve the outcomes.
Yeah, and I think it's particularly interesting, that use case you bring up in trade surveillance, with that kind of ROI being a big focus, is that, even if we can bring down false positives, or, bring up some factor of productivity by 1%, just the volumes that these banks are dealing with, that can result in huge savings. I think, Niraj, is that what you're also seeing? Maybe a big focus on ROI from the client side?
So, Dan, there are a couple of things which we are seeing with our clients. The first thing that we are obviously seeing is technology is great, but get it to life in my context. So, if you look at traditional Gen AI, large language models, they're very compute intensive. And obviously, that's throwing up a little bit of a challenge for financial institutions. So, one of the things that a lot of financial institutions are really looking at is small language models instead of large language models. And really, I don't need that kind of compute. I don't need that semantic data set for my set of operations. If I'm a wealth manager, I've got limited operations. I don't need to diversify so much. So that is one conversation that we are having. How do we really organically build Gen AI models rather than take a large data set which fits all situations? The second thing that we're also seeing is I mentioned this earlier, Gen AI as a way to change your business model. So obviously, Gen AI needs a different mindset. Gen AI needs some enabling technologies around data and analytics. Gen AI needs more discipline from a men versus machine congruence perspective as well. So how do I really use this transformation opportunity to really fundamentally change the way we operate and build competitive advantage and cost of efficiency? So that is another theme that's really going on with our clients. But overall, I think the kind of optimism that I've seen in this technology versus some of the other technologies that were there previously is immense. There is a positive bias towards Gen AI. Surprisingly, though I would have thought that this is more of a risk than a opportunity, but there is a lot of optimism and positivity about this technology for the future.
No, I think those are two great answers. Like you said, that joining between they're excited about the technology, there's optimism, but they need to know concretely how does this work in my data center footprint, in my cloud credits, let's even say, or just any number of other pieces relevant to their context.
2 points I want to mention, Dan. One, this is not a public knowledge again. I'll anonymize the names. We are working with a hyperscaler and a regulatory platform provider to bring three levels of Gen AI. So when you look at regulatory reports, you have 50 to 70 of them, depending on region, whether it's be China, Asia Pacific, Europe, or US. And you have roughly 250 regulatory data elements. What we are doing is we are creating a lake house of regulatory data elements. And so the first one is bringing Gen AI to bring that feed, and then apply industry models like banking industry regulatory data models, BIRD, or EBA or EPA or FRB specific models, and then go into a translation of calculation and then delivering the regulatory reporting. So this is the three layers of Gen AI we are using. We are very close to do a market announcement in maybe in the next 90 days. We have 15 clients identified to go after this, so that will come. But this is one of the use cases. The another one is multi-jurisdictional investigations. How do you enable it? Leveraging blockchain just to ensure that non-repudiation, and then using extreme AI to ensure that these investigations are done in a faster manner, right, between regulators. So these two things we are taking to the market. I am not at liberty to share anything more than this, but this will change what Niraj was saying, immense target market capabilities that we will be part of it. That is the ecosystem that we live in.
So Dan, if I can just add, I exuded positivity in my last message to you. There was a recent article by the European Central Bank which stated that, and I quote, European financial institutions are at the risk of American big techs. So if you look at Gen AI and really look at the players that really are propagating Gen AI, it is the big techs. If you look at the compute requirements that are needed for Gen AI, it is the hyperscalers. So are we in some way becoming more and more dependent on the big techs? Are we really? I think there has to be a different view of risk and resilience, especially as Gen AI takes over, and you have one or two of these big techs that have the leading edge on Gen AI. So I think there is a risk as well. I think the second one is in terms of data. While a lot of the concerns on data have been alleviated, there is still a question mark on how much data, uh, uh, in terms of breaches of data, in terms of confidentiality on data, in terms of pinning responsibility for any data redundancies that creep in. So I think that is another aspect that's not been fully understood yet. So I think these two will be very critical in taking any decision on Gen AI as we go forward.
Yeah, no, certainly. I think that's a great point to add. Like you say, we've seen a lot of competitive concerns, I think, and I'm sure there's two arguments to be made. Perhaps there's the big tech companies which sort of have a moat around them in terms of the compute capabilities they have for inferencing, and then the existing customer data they have, and just in general the money, I imagine. And then there's also, we spoke a little bit earlier about the kind of US and APAC countries that are viewing the kind of competitive advantages and ways that they can kind of get themselves back into this ecosystem with more innovative approaches, or like you said earlier, using small language models to kind of offset some of the energy costs. I think you both brought up some very interesting points there. And looking particularly at, we've spoken a little bit about kind of deriving value from these AI investments and perhaps where the ROI is. But I think coming back to the research a little bit, one interesting stat was I think that 67% of IT leaders in banking report that there's been widespread adoption of Gen AI, particularly on the wealth management side. And I think this chimes with a little bit of what both of you have been saying already. This is higher than any other area and we spoke a little bit about hyper personalization and monitoring and some of the other use cases. But do you think that wealth management is this area where we're going to see the most, I guess, the earliest and the highest investments into Gen AI in order to gain that value? Perhaps Madhu, you could speak a little bit about this one.
So that pattern is very encouraging, especially if I look at the last 6 months of client interaction. The reason for that is wealth is newly formed, maybe an entity which kind of branched out from capital markets, became wealth, and started as a cost center. Now has its own profit center and revenue from a line, and become a line of business. So it is fairly new. Last 5 years, it has emerged into a line of business. So therefore, adoption of Gen AI and AI is very easy. There is not much of a legacy to deal with, right? And also, when you look at it, the traditional investment management is becoming financial planning in wealth. So therefore, you will have higher number of use cases and higher number of the data which Niraj talked about, availability, which is right there. And then if you look at your order booking data, how to, what is the investment, what is the right investment on the goals that the customer set, whether it is a ultra high net worth or a high net worth individual, and then what is their competitive wallet share with similar banks or financial institution. That is very, very interesting statistic. So that is what is changing the game. Everybody's trying to retain and give more wealth facilities, what I call. So that is emerging in my mind, and that's very, very true from a adoption of Gen AI and AI.
No, definitely. I think it's interesting, as you say, as kind of a relatively new field or subfield, that there's not all of those legacy networks and deals and contracts that need to be kind of swept away. Does that kind of chime with your experience, Niraj?
So I'll take a step back, Dan, and if you look at AI versus Gen AI, especially within AI, machine learning versus Gen AI, right? So the way Gen AI was stacked up was it was supposed to be a semantic transformer, which meant it was very good at sentences and words. The way machine learning was stacked up, it was supposed to be a clustering, classification, automation framework, right? Uh, so wealth management, by the nature of the business, is more client centric, which means you have a high touch with the client. You've got a client that's very demanding from you, and that's where Gen AI as a technology is going to be very well versed in dealing with the client. Whereas if you look at some of the other back office areas, I think you're going to have greater adoption of technologies like machine learning and intelligent automation versus Gen AI. So absolutely apt from a sector perspective. It's no surprise that Gen AI has picked up a lot more on wealth management compared to other areas.
Do you think there's perhaps it's a great point you make there. Do you think there's perhaps a risk of, especially more kind of business and less kind of technology focused stakeholders, not kind of grouping a lot of those machine learning principles under kind of the umbrella of Gen AI, even when that's sort of not necessarily what's going on under the hood?
absolutely a risk, and this is the issue that we face with a lot of clients and a lot of vendors as well. So typically, when there is a shiny new object on the road, everyone kind of picks it up and tries to use it for everything that they have. But not all problems can be solved by new technologies. I'm sure that there are issues and problems where machine learning would do very well, or where neural networks would do amazingly well, or even just workflow based automation would do extremely well. So I think one needs to really look at the problem. I would say spend 80% of our time with the problem and only 20% of our time with the solution. Right now, it's the other way around. It's 90% of the time with Gen AI and 10% of the time with the problem.
Yeah, perhaps a cautionary tale there when we're looking at, are we sometimes, when you have a hammer, everything looks like a nail kind of situation. So yeah, as we kind of move to the end, I kind of wanted to just refer back to last episode where when I was speaking with Jason Gandhi, he spoke a lot about how banks have heavily invested in technology and especially AI, obviously in 2024. But as we've spoken about today, there have been some issues with production, overcoming sort of regulatory hurdles and legacy infrastructures and setups. I guess it'd be interesting to speak to you both about looking to 2025 as, a new year, a sort of bright horizon. Whether you think that this will be the year that banks will finally really unlock that value from AI, or whether they'll just be a little bit longer to go. Perhaps Niraj, you could go first.
So Dan, I think the definition of value would differ depending on what you're looking at. I see Gen AI as the innovation platform for the future. A lot of the enabling blocks on Gen AI, as I mentioned earlier, like data, like APIs, basically set the foundation for changing the business model of the organization for the future. Becoming more client centric, being more cost optimized, and being highly efficient and productive in whatever you do. So I'm not too sure if you're going to see the hard dollar return on investment from Gen AI in about a year's time, but you're sure going to see the foundation for the future in terms of becoming a more nimble organization and also competing very aggressively in the market.
That's a great answer. I think, like you say, the productivity, the efficiency, the competition, that all has a value of itself, even if it's a bit harder to ascribe a dollar value. What do you think on your side, Madhu?
I absolutely agree with that assessment. So basically, the banks, which is trying to unlock, my response is two parts. The first part is the unlocking streams are regulatory clarity, which is emerging with frameworks, mature AI models that is coming, because AI is in practice for more than a decade now in financial institutions, right? Better data integration that is coming with technology and unification of data. And then customer expectation alignment is emerging, right? The emerging employee workflow aligned with the customer journey is becoming a product. The intersection is becoming a product. While this is happening, still there is a scaling of AI to production, right? Is still a proof of concept, right? It has not gone into the mainstream. So therefore, challenges persist, right, in making it scale. Regulatory hurdles, right? Global regulations around AI ethics, transparency, and explainability require banks to tread it cautiously, right? And then the primary kind of a challenge is talent shortages, right? Which is good for companies like us, but essentially these are all the unlocking streams, and then the associated challenges that banks and financial institutions has to overcome, like any other industry.
No, of course. I think those predictions are great, and I think we can maybe come back in a year and see where we've got to. But those are, I think, very very sensible assessments of the market. So, Niraj and Madhu, thank you both for joining us today and sharing your perspectives on how Gen AI is transforming the banking industry. It's been a really fascinating discussion, from everything from what we're seeing at Sibos and Money2020 to the practical kind of day-to-day challenges, opportunities, and even misconceptions that we see with your clients. So it's clear that AI is driving a lot of change, but that's, it's just the beginning. We're just laying the foundations today. So, as we look forward to 2025, looking forward to see how we kind of see these foundational platforms and ecosystems built to drive even greater innovation. To our listeners, thank you for tuning in to this episode of the NTT Data podcast. We hope you've gained some valuable insights into the future of AI in banking. If you'd like to learn more about these trends or explore how your organisation can benefit, be sure to check out NTT Data's latest research paper and stay tuned for future episodes. Until next time, I'm Daniel Harrington. This has been Niraj and Madhu. Thank you and goodbye.